Thank you, Mr. Chairman.
Senator Cotton.
Thank you. Welcome back, Mr. Chair.
Thank you.
Much has been made about the slow pace of the recovery over the last 8 years. One aspect of the recovery that doesn't get quite as much coverage is the geographically distributed nature of the recovery. It's been concentrated primarily in larger metropolitan areas. In fact, if you look at small business creation, just 20 counties in this country accounted for over half of all small business creation. This is in contrast to 25 years ago in metropolitan counties with more than 1 million people. Growth in new businesses was only 3.9%. In counties with fewer than 100,000 residents, it was 8.4%. Whereas in this recovery, small business creation in metropolitan counties of more than 1 million is 4.8%. Unfortunately, in small counties of fewer than 100, it's negative 1.2%. In Arkansas, we call counties with fewer than 100,000 people counties, because there's only 7 out of 75 that have 100,000 counties or 100,000 people. On page 19 of the most recent report, the Fed states that measures of small business credit demand have remained weak amid stable supply. I understand that bank small business lending is weak and it's never really recovered to pre-crisis levels. In your testimony, you also attribute the outcome to weak small business demand for credit, and you say that the supply of small business credit is stable. But how do we know that the weak lending demand is the cause of this weakness in small business lending, and that, at least to a degree, a contributing factor is not the supply of small business loans being caused by the decline in the number of community banks in places like rural Arkansas?
So we have a number of surveys, including our regular survey on lending standards in banking organizations, that helps us try to distinguish between demand factors that may be affecting the growth of credit and supply factors. And the statement that demand is weak is partially based on that information. We do have surveys like the National Federation of Independent Business that regularly queries smaller businesses and asks them about the problems that they face. And a very small number cite inability to gain access to credit as a significant factor reflecting their businesses, that's affecting their businesses. But community banks are important sources of supply of credit, especially in rural areas, to small business, and we're very committed to working to reduce the burdens that these firms face from regulation, so that they can thrive and they can meet the needs of consumers and small businesses in their communities.
Does your study and analysis show what small businesses do in places like Cleveland County and Dallas County, Arkansas, when their small community banks close or maybe are acquired and then their presence is reduced to an ATM location? So if you're a small business there and you used to rely on your small bank in Cleveland or Dallas County, that bank is no longer there, what's the most common avenue for them to try to seek financing?
I'm not aware of data that bears on that. There may be something. If there is, I will get back to you on that.
Okay. Thank you very much for your testimony. Thank you, Mr.